Martin from Secrets, the channel for learning about trading and investing. Welcome to the weekly stock market analysis show where we look at what happened in the market during the last week using the technical charts and then try to learn something from and plan for a better trade for the coming week. That's starting from tomorrow, July 24th, 2023. So if you're not subscribed, please subscribe right away so that you don't miss out on videos. Also subscribe to social media links that's given in the description so that you have the interim before the weekend analysis. You have several posts on the charts and technical analysis that's put in the Twitters and other social media platforms. Okay, so let's get into the charts. So here we go. We have the weekly charts here. So market is made almost kiss, it almost kissed 20,000, you can say, right? Big breakout happened in the Banknifty. Look at this right side. Banknifty weekly charts is what you're seeing. The wide range bullish candle, big mega 2.85 kind of move is what you see there. Wide range bullish candle on the weekly. So Banknifty was consolidating for the 2 weeks, but Nifty was divergent and moving up. Banknifty was consolidating. Now the previous week it simply broke out, right? It made new all-time high. Nifty also made all-time high, very close to 20,000 K, but not yet there. So big breakout move, and then naturally this pullback that you see, this wick size that you see, and the small wick size that is in the Banknifty is natural resistance. Whenever there is a big rounding numbers like 20,000 comes, people would be booking the profit. There will be resistance, there will be psychological price actions that would happen. So now this, would it turn out to be a reversal, is something that will be cautious based on the support and resistance levels or the retracement levels that we know about. But consolidation is going to begin now that it has made such big moves and then kissing distance away from big rounding numbers like 20,000 on Nifty and 46,000 on Banknifty. So on the daily, what happened? This is what happened after the big breakout move. On Friday, it pulled back. That's what you see there. It's almost like a spinning top, small body, and this is even or hammer or spinning top. It's not big size is not fitting in both of that, but clear retracement. But at the CIB support zone where the previous resistance is acting as a support and a bounce from here on the Nifty is possible, similar to how it was on the Banknifty previous week. Banknifty formed a doji. Doji is indecisiveness. Big bull and bear fight had happened is what is indicative of this long wick size, and it's indecisive after the big breakout on the daily charts. That's what I see. But weekly is what you have to see. Weekly, there is no indication of bearishness or weakness. Daily, there was a pullback that happened. It's quite natural after it hits the big numbers. Bullish bands is expanding on the upside on both. Indicates further up move can be there. Bullish bar is very far away. So the more far away, this will be attracted to the moving average. It's a median of the band. So that move back beyond this 19,400 and beyond this 45,000, where the median is there, will be dangerous. But as of now, it's expanding. The bands are expanding on the upside. So it's on the daily charts. The bunch of bands are indicating that further up move is possible, although it has fallen down from the top of the band. Right? Expansion is continuing. This is another view of the support resistance levels. You can see that it's in a parallel channel, and it has exactly hit the resistance where it was marked last week. That's in the top of the channel. So some consolidation can happen here. Some retracement also is possible, But as long as it's within the channel, it should be fine. But that's what I will see. So there is some more space for the Banknifty to move, right, towards the top of the channel, as per the panel channel, on the right side. So that's indicating that more moves could happen. But again, it has hit resistance at the exact zone where it was drawn last week. This is another look. So we have a flag pattern here, rounding pattern, a cup and handle pattern. It's clearly visible in the dotted lines, the flag and the cup and handle. And the breakout has completely happened, and it is on the way. Absolutely nothing is nothing to worry. As per the charts as of now, and things could change anytime. But as of now, it's a breakout in the progress. Expecting a retracement, big breakout is on the way. There is more space to go as per the pattern, candle, target. Right. These are the weekly charts, by the way. Look at the support resistance zones. You can see that the first support downside would be that swing low. That's near to 19,745, 19,690, 19,595, and 19,422 is where the 20 EMA is there. Longer to go, that's in there. After that you have 19,300, then you have gap support at 19,200. 19,200 could actually be good support. 50 DMA is coming at 18,952, and 19,000 rounding number would be, I would say, very good. So a lot of supports on there. On the upside, 20,000 breaking would be the first thing, then 20,500 rounding numbers likewise, or again extend using the Fibonacci extension and then find the targets. But yeah, the major resistance first would be to have a clean close or a weekly close about the 20,000. So that's a Nifty. Banknifty, you have the first place that has been converted as the rounding number 46,000. After that 46,500, then 47,000. Suppose clearly can be seen below at 46,000 definitely, and then 45,655 and 45,044, which is 20 exponential moving average. 50 exponential moving average is way down at 44,276. Before that we have supports at 44,844 and 44,500 nearby zones. It's a long way till there. So this is the support resistance that can be seen. So based on the previous swing low highs and the Fibonacci levels is what and rounding numbers, what we're talking about, support resistances. So that's Banknifty support resistance levels. Make a note of these two levels and then correlate and then study that along with the open interest levels that we are going to see in the next slides. Before that, momentum and the trend. We're using the RSI for the momentum indicator. We are checking the weekly as well as the daily charts, and we are also using ADX trend analyzer, because the ADX is the indicator that we use for finding the trend. So trend is absolutely bullish. Absolutely nothing has happened. It's on both time frames for the Banknifty and Nifty. It's absolutely bullish. And for the momentum, it has slipped down on the short term, but in the medium term, that's a weekly chart. So it's absolutely bullish and rising with strength. This is summary of this, right? Bullish falling on the short term, bullish rising on the medium term. Bullish rising on Banknifty, bullish falling on the short term on Banknifty, and bullish rising medium term on Banknifty. Trend indicators absolutely bullish rising everywhere on both indices and both the time frames. So that's it. Absolutely nothing much has happened. Absolutely small dip that has happened for the momentum in the trend indicators. Moving on, looking at the volatility in the opportunity analysis, the VIX has spiked up. That's again there is a divergence there because the market is moving up, but VIX has fallen, is also moving up. This is contrary. VIX is supposed to have fallen down. The market is falling. That's because of the Friday's move probably. But yeah, there's a divergence here, so that may indicate that this down move, this up move that may happen. So VIX is spiking means indicates that the up move may not be for real. It could be some of all that can happen. Sometimes when divergence happens, this is a possibility. Right? Cautious. 11.48 is what this VIX is after the 7% spike. It's not negative. It is positive. Yeah. It's a spike on the upside. So it is supposed to have, ideally, not all situations, but it's supposed to have cooled off when the market goes up. But the Friday's reversal process, as I said before. So sharp reversal often seen. You can see that the VIX has a historic low level of 10.5 nearby zones and then spiked up. Last time also a few weeks back also it spiked up and then fall down. So it's zigzagging in that zone. So if there is a big crash or something that happens, the spike can go further up and hit the 14, 15, 16 like that. It can go up. So right now it's consolidating and it's hovering around choppy at granular volatility, as some experts are calling. So it's zigzagging in the low volatility zone. So there is less fear and greed, but it's very choppy in the intraday. That's what is happening. So it has to be carefully dealt. But every time it falls below the 11, the spikes can be very sharp, as historically how it has proved. If you analyze the VIX charts, you can see that, right? So VIX is low, remain in the low volatility regime. So you can take some more risk, but intraday volatility is very cautious. Normal interest of the futures is showing its long unwinding, which is bearish, right? It's not encouraging. So long unwinding is the last build-up that has happened on Friday. Options with the options for the July expiry, that's the monthly expiry, July 27, next Wednesday, is showing that it's not that bullish enough for the Nifty. It's 0.79, but it's bullish enough. It's bullish from Bank to 1 plus. Right? So put call ratios indicative of the bullishness in the options. So options charts are showing that Banknifty is strong with a very good support at 26,000 zones, while there is some resistance to play around with in the case of Nifty. So look at the levels, 19,000 and 19,900 is where the highest put and call writing is seen. Second highest is 9,800 and 19. Yeah, both are at 9,800 is where the highest put and call writing is second level. Banknifty 46,000 and 48,000, 2,000 points were the highest put and call rating, support resistance is seen. 45,000 and 46,000 support resistance that's seen after that. So, nutshell, very tight range for the Nifty and very wide range is seen for the Banknifty as per the option writers, how they speculate. Right, that's what. So, make a note of these levels and correlate that with the levels that you studied earlier, and then you could get a clue on both supports and resistance and both to enter and exit. Right. Analyzing the different industrial sectors that constitute the index, we can see that the IT was a sector that got hit last week and that had caused big trouble. Even Nasdaq had fallen down. We'll be analyzing that later. But IT sector was 3.5% down, and momentum has slipped to the side with bottom medium terminals. It had climbed to the bullish zones on both the time frames, and then it was ready to take new positions long, but got hit badly. Right. That's what happened last week. That is the only sector that got seriously hit. Metal and realty also got hit, but very mildly, less than 1% of hit. And the momentum is remaining in the bullish in the metal and the realty also on both time frames. Right? Short term and medium, it's bullish in this one. Although it has got hit slightly on the price in the moment. Right? But autos moved 0.5%. Farmers moved really by 2.3%. And FMCG also moved slightly. Flattish, 0.5% less than that. So overall, its bullishness is impacting the auto, pharma, and FMCG, and metal and realty also. But IT sector, we have to stay cautious there for some more time. So that's in that. So across the sector, bearish has not appeared yet. That's something that can be confident on. So look at the ID. It was in a consolidation zone, the top of a breakout zone, and then it got hit and then moved back. Probably it may take some time, some more consolidation here before then hit the next resistance where the gap is there. You can see that. So momentum has climbed the bullish zones and then fallen back, slipped back. Metal momentum is still intact. It's still maintaining that bullishness. Last week it did went down. Auto continuing to move up, bullish momentum, bullish trend. Pharma also big wide range bullish candle, continue to move up, momentum bullish on more time frames. Absolutely no issues there. And reality. FMCG charts are not shown here. Let's try to see and see them directly on the charts here. So FMCG also is what I should say. It's 0.5% up. We have seen that. So these are the charts. No, we're just missing that. Right. So it's bullish on both time frames. Absolutely no doubt on that. Right. So the charts is missing here. That's why I went to the trading view to show you that. So reality also went down, but momentum is intact. So right, this is the chartical form of what I explained in the previous slide. Moving ahead, what we are analyzing is the different heavyweights that constitute max to the index. You can see the HDFC Bank, which has been consolidating violently. There's a merger that happened recently, so it is set to break out of that zone where it had spent a very long time. The moment that breakout happens, once it settles down, it will be really, really big. It will be the height of this rectangular box. It can be big moves, but as of now, sideways consolidation is what's happening. Lens did broke out of that consolidation zone and it's in the bullish trend and bullish momentum on both time frames. So no issues there. So if this is a breakout, then this is going to be really big. Right? It may take time, but positionally it may be a big breakout that happened. There was a long consolidation in 2021. There's another long consolidation till 23. That 1 year consolidation. Now it's about a breakout. So lines showing bullishness while HDFC is remaining weak. ICICI again bullishness. Wide range bullish candle broke out and made all-time high after a long time of consolidation there, forming a cup and handle. It's a cup and handle breakout on weekly charts with momentum rising and the trend rising. Absolute brilliant move by the ICICI Bank. Right? So lens also is attempting to break out. So ID has got hit. You can see that Infosys has formed a wide range bearish candle. Momentum got hit exactly the RSI 60 and then fallen down into the sideways, remain in the sideways. TCS fallen, slipped back slightly after already climbing in previous week into the bullish zone, skipped back and slipped to the medium term sideways momentum. It is wide range bearish candle is what I see there after that attempted to break out of that. It may take some consolidation before it breaks out from here. Kodak Bank, as usual, it has been it's a contract trade stock and it has been consolidating. It's moving zigzag up and down. So right, last week was very good. It has climbed back into the bullish zones wide range bullish candle. So when the banks moved nearly 3%, then all the banks would move along with that. That's what happened. So Kodak in the bull zones, and other bank, ICICI Bank is bull zones, Reliance is good, and HDFC Bank, in spite of the bank breakout. So imagine if HDFC Bank also was breaking out with white range bullish candle, Banknifty would have been 48,000 for sure, right? Because HDFC Bank is the highest contributor to the index. Now, the last one that has got added, recently added ITC also into this. It's also having enough weightage on this bank. So ITC actually, it's in the big breakout rally that is happening, and then it's about to hit the 500. 490.45, definitely 500 will be the time where some profit booking can be done. Right. But it's a cup and handle, it's a very long multi-year, 2-3 year 4 years of consolidation is blocked now, so it can go much ahead from 500 to 550, 600. All this is possible, and it's a rally that's happening after multiple years of consolidation. So look out for that. Momentum and trend in IT is absolutely bullish. So that's what's where the money is flowing in from the foreign investors. So banks are doing good, ITC and Reliance is doing good. HDFC is not that great, but it's maintaining sideways, not bearishness. Kodak was also in the up move along with the banking index. So that looks all fine. So index heavyweights, there are some movers that's holding the market. So as long as that's there, there's nothing to worry. Others will follow, right? Reliance, ICICI Bank, and what else you need? Reliance, ICICI Bank, Kodak Bank, and ITC is there above all that. So these are the heavyweights that holds the market. Look at how the money has flown in. Fyers once again end up being a 5,000 crore buyer. It has been happening since several weeks now. That's a very positive thing. There is really a profit booking, and then sold little 2,290 crores. They had been buying all the way when the Fyers were selling earlier previous years. But now they are profit booking and make money. But yes, Fyers foreign money is coming in, and that's very positive for the market that institutional support is there. That's what is holding the market again. Another look at the global markets, the global currencies and commodities. Let's look at how the currencies. Dollar index 1.15%, 101.08. So it's a cup and handle pattern. You can clearly see reach the support and then simply bounce up from a support zone. Don't know whether it's sustained. There is a very good chance it can fall down to the 94 kind of levels at the end of the handle and then bounce up from there. Or it could consolidate here and then bounce up. It's possibilities are there. But it's in a parallel channel, a trend cup and handle part, and then last move was a bounce up after a big fall that happened earlier. So 15% of fall has happened from the previous swing high. Right? So dollar has strengthened last week, but otherwise it has been dipping since several months now. US INR, no, it's 0.10, it's flattish, but it's down. It's on the edge of a narrowing wedge. Anytime anything would happen, it can fall down. Just narrowed in almost to the end of that edge, and then now it may be time to cool off something and fall from that wedge and then fall and take support at 80 levels. And that's good for our economy also. Rupee could also strengthen if that happens. So looking forward for that to happen. But as of now, it has not fallen, and rupee remains weak. US INR is still very close to the all-time high. Crude oil 2% up again. It has been rising 2% last week also, 76.7. But as long as it remains in this level, not breaking out of the parallel channel, things should be fine. That means if it moves above the 87-90 kind of levels, then we have trouble. Until then, it should be fine. But otherwise, it's consolidating, and it's rising up towards the top. It's consolidation with the momentum also rising, but it's rising in within the sideways momentum. Go look at this cup and handle. Trying to break out of that handle. If that happens, it could be really big. So if the wall is breaking out and making a new all-time high after multiple failed attempts earlier, if this is going to happen, then definitely there is a threat to the assumption that the stock markets also may be making a bigger correction, because people shift the money to the safer havens like gold when from the equity. So money can flow, can change. So we don't know whether it will make another attempt and fail, or make another attempt and make new all-time high. Never know. But as of now, it's sideways momentum, rising and trying to break out instead of falling after some retracement that happened in the last several months. Right? Gold is still strong and moving up. Global markets, we analyze US market, Dow Jones Index, Nasdaq Index, and S&P 500 Index. Now, Dow Jones Index is broken out, wide range bullish, solid up move with momentum climbing the bull zones, and trend also absolutely bullish on the medium term. So that breakout has eventually happened on the Dow Jones. But there is a contradiction. There's a mixed bag today. This week, it's an inverted heading, inverted hammer, a breakout. Had earlier happened before the Dow Jones and the Nasdaq, and some pullback has been there. S&P 500 closed green. That is also seen to be breaking out of that descending wedge. How much it moved? S&P 500 0.7% up, and Dow Jones did bigger move of 2% while the bullish candle. But Nasdaq pulled back a little bit, nearly 1% pullback has happened. But otherwise, all of them now in bullish momentum and attempting to break out of that wedge and then make new all-time highs. That's what is happening in the US market, which is positive. Mother market is moving up and breaking out. It's positive. New stock picks for the next week is on the Hindustan Aeronautics. Weekly charts are showing there is a flag. Right? Breakout could happen, good risk reward, doesn't happen, stop out and then take a happy loss. But this is a beautiful pattern that's emerging there with bullish momentum and bullish trend. Above moving average, simple moving average, volume also is there. So position as well as this can be played, but yeah, so swing plays has to have tight stop losses. Another long pick is IDFC First Bank. You can see there's a flag pattern that is also seen there about a breakout. Entry could give decent 1.5 kind of risk reward is only that you have to anticipate because it is already ran up. But positionally, this could move much more, as much as the height of this cup pattern. So it's a cup and turn breakout that is happening, but in between there is a flag pattern also that is coming. And if that immediately breaks out, it can be really good. Volumes are good above average, decent volume. Momentum is bullish, trend is bullish. So IDFC First Bank and Hindustan Aeronautics, the defense stock and bank stocks, stock picks for the next week. Another stock picks. This is a payoff for the Nifty options weekly strategy. It's a double diagonal calendar split is what you're seeing. Completely hedged, where you're selling the near months put and call options and then taking far month put and call option as hedge. And it gives a very good range and a good probability. But the risk reward may not be that great, but you have to come out before the expiry day, one day before that, at 1 or 2% maximum. You should not hold on beyond that. Advantage here is that it's back up positive. That means the market is at very low, and if the spike happens in the weeks, this could benefit because decay out happens lower on the hedge portion, so it can benefit. So that's a double diagonal split weekly strategy. It gives consistent profit, not big profits. That's how this has to be played out. Right? That's a payoff. Now that we have seen a lot of things, let's wind up. Last week, what happened? The big thing was the Banknifty, which was consolidated for 2 weeks, finally broke out big. Wide range bullish candle can be seen there, right? So Nifty was already moving up and continued to move up. It went and kissed almost 20,000 Ks and made all-time highs, and then it met with a profit booking and all resistance. So remember that we have made it nearly 20% of rally is what has happened, right? And it's a breakout that is absolutely a breakout that has happened from the cup and handle flag patterns that we have already seen earlier. There is a bullish momentum and bullish trend. The Fyers are buying strong. Low volatility is there. US market is showing breakout. Bollinger Bands is expanding. Moving average supports are there. Window gap supports are there. Change priority zone is there in the Nifty. All this gives the bulls even more hope that it can further break out from 20 towards the 21,500 or 20,500, 20,000. So that's bulls can hope for that given what the indications are there from the market. But a drop in momentum by the end of the week happened. That's a retracement signal. That's time to be cautious. The build-up last that is seen on both indices on open interest of the futures is long and winding. Inverted hammer and small and muddy indices weekly pattern is what you see on the weekly. So you have to be careful. It highlights that you have to be cautious. Reversals from the top cannot be up. Put back retracements of would come in. Market cannot go right like a rocket always or vertically. It does not move. It would pull back. All you can do is manage your risk and then see which all supports it breaks. Right, and accordingly take the action, cut short, push in sizing or whatever. Right, that's all in our now. Other things we can't predict, but otherwise market is in the bullish zones. But now that it has run this much, you have to be cautious. So market views might be bearish to neutral. Good. Right. So global fears are all that Fed interest rate hikes are coming next week. Hikes or whatever, decisions are coming, so that could make them all market volatile. All the previous escalations have come down, VIX has cooled down, but still uncertainties are there. Crude oil is under control, but rupee is still weak. So would rupee strengthen more, or would crude fly? Would the gold break out? All these are questions that we are not sure on, but all these are possibilities at this stage. So there is uncertainty that prevails in the market. We have to be cautious, and we are on the top. After 20% rally, we are on the top. Extremely cautious. So the range that we look forward is 9,200 to 20,000. For the Nifty, 45,500 to 47,000 on the Banknifty. Downside, 90,000 and 44,000 if it is held. And market is consolidating within that range, everything should be fine. Otherwise, time for us to be cautious. Yeah, that's my view. Mild bearish neutral. As always, hedge positions has to be taken if you're carrying overnight, and non-directional strategies help you to have defined risk and you still be in the market, and your profit or your capital not wipe out. You can still be in the game. You get another chance to play. Otherwise, you don't have a chance. You're simply thrown out of the market if there is a black swan event that happens. So you have to be cautious. Now, also this hedging option strategies which are there in the playlist about that. There are strategies for investing also in SIP model where we get regular income. There are strategies for that. Check out the playlist and then see these videos also. Right. So that's my view. So subscribe if you're not subscribed right away. I know we need your help in this regard. If you like it, hit the like button, share your comments, feedbacks, everything. It helps us a lot. And please share it to others, your friends. No, if you already subscribed, please share it to others, please. I appreciate your help in this regard. Thanks for watching. And there are social media channels where I said in the beginning that we will be posting, not on YouTube, on all these social media channels where we're posting the regular, time analysis, technical analysis, charts, and patterns that emerge during the weekdays. We will be posting it in. So subscribe to all of these channels as well. Right. That's my piece. If you find this, if this has brought in some clarity and this brought in some knowledge, then please appreciate and subscribe and share to friends and colleagues. Thanks for watching. Happy trading, happy learning, happy investing. Bye.